Good morning, everyone, and welcome to the Quantum Leap Morning Leap session for Monday, May 2nd, 2016. It is the first trading day of the month. Woohoo! My name is Doug McKay, and I am the founder and head moderator for Quantum Leap Futures. Each morning we come together in these live sessions to take a look at the market macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses for the day. This is a subscription room, so if you're interested in checking us out, I'll put up my contact information in just 1 second. Before I do, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see at Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, if you do want to get a hold of me, there's no website, there's no blog. This is not a commercial venture. Just send me an email at quantumleapfutures@gmail.com or send me a Skype request at Doug_McKay. You will need a Skype account. We do use Skype for chatting back and forth, and then we use this GoTo for the pre-market session, and then for me displaying my charts and live trading and analysis during the course of the day. If you like this video, do search on YouTube on Quantum Leap Futures. You'll find a couple hundred, 300, 400, I don't know how many days of these pre-market sessions, so you can get an idea of what we do each morning, and then also give you an indication of what our track record's like. If you like what we do, follow me on Twitter at Crazy2. Okay, so Friday we opened up just inside of Thursday's range. The main hypothesis was a move up to the naked VPOC or the close, and then to roll over and to come down and test the top of the gap zone at 64 and come down through to the bottom of the gap zone at 58.50. And possibly even go down to the 40.50, which is the microcomposite VPOC down in the balance area that we broke out of a while ago. Didn't quite get up to the naked VPOC. They failed to hold inside of the prior day range. Once opening up, they went up and tried to get into the range to get to the naked VPOC, and then they rolled over, came down, took out that naked VPOC at 20.54.50, rotated back up through there, failed to get back into the prior day range, and then they rolled over and came down into the 45 area. That's that CHVN, and then basically we chopped around there. Now I want to talk about this because I talk about this all the time, and this is a very important lesson, and give you an idea of why I draw my microcomposites the way I do. So this was the balance area that we were trading in before we had that gap up in the breakout. And the one thing I always do is when we balance out coming in, when we're balancing out, even though we've got a larger balance area with the microcomposite, I always try to figure out what was the most accepted price just before the breakout, because that is going to be your key level that you're going to be looking at, okay, if you break back inside of that balance. So, just before we broke out of that balance, we had that the smaller time frame microcomposite at 47.75, and that was the most accepted price just before the breakout. And then we broke out, we gapped up, and we went up here, created the new microcomposite up here, and then we fell out of that balance, and we came back down inside of the value area. Where did we come to? We came right down to the 47.75. They stretched it out a bit to 45.75, but this was the most accepted price just before we broke out of the balance. So once you come back into that balance, that's your first target area that you want to be watching. And you can see that this area, whoops, I didn't mean to take that down. You can see that our target was right there at that 2048. And that's a key thing in thinking in more of a macro view of auction logic is, okay, if they're going back into price discovery to, into a prior balance area, what's the, where were the buyers and sellers accepting value just before the breakup? And this is this happens in both sides. If we were breaking up to the upper side, I'd be looking at the same thing. Now there's nothing above us, so there's nothing there, but this can go in either direction. So if you do a breakout into a prior balance area up, you're looking at, okay, where did they try to hold, where was the last price they tried to hold value at? And when you're coming down, where was the last price that they accepted? So just wanted to point that out to you, because that's a key piece of auction logic that you should be thinking about in the macro view. All right, so let's go and take a look at the news today. We've got bank holiday in Europe, although we do have ECB, Draghi speaking at 10 o'clock. 9:30 this morning, we've got Canadian RBC manufacturing PMI. 9:45, we've got final manufacturing PMI for the U.S. And then at 10 o'clock is going to be where all the news is today. You've got the ECB, Draghi speaking. You've got the ISM manufacturing. That's the big news this morning. And then construction spending and manufacturing prices. And then at 1:25, we've got SNB Chairman Jordan speaking, but that's not really big news. Loan officer survey, and that's about it. So just 10 o'clock and 9:45, just to be careful on the open and in the first 30 minutes. Okay, let's go to the, I like to start my day, same routine every day, go to the monthly. I use a candlestick chart with a 9 EMA and a 20 SMA. Somebody sent me an email over the weekend, and I just want to clarify that, yes, this is paper money. I use this just as a homework. I have my option account, so I get live data here, and I use this. I don't trade through here. I'm not trading paper. I'm trading real money. They were trying to say that I was a paper trader and I shouldn't be doing these sessions. Well, I kind of had a big laugh about that. Anyway, I use a 9 EMA and a 20 SMA. I'm looking for slope and separation where it's being challenged or violated. Monthly, we had this beautiful trend. End of the year, we tested below the 9 and the 20 and violated the trend, then took it back in October, November. December, we came down and tested again. January and February, we fell out of that. We got back below the 9 and the 20 and violated it again. And then March and April, and we took it back. It was it was hit and miss whether or not April was going to be a bullish or bearish. It ended up being just bullish. We ended up above the open of the month, and so far in May we are above the 9 and the 20. So we have a possible continuation pattern to the upside. On the weekly, you can see that we have had this beautiful upward movement, good trend. We got slope and separation. We're holding above the 9 and the 20. We came down in April and tested the 9, and now in May we're still holding. So the trend is up on the weekly. On the daily, we have come down in the last day of April and closed below the 9 and the 20. We're currently below the 9 and the 20. We're going to get an MA hug here. The 20 SMA is up at 2071 and a quarter, but we have a possibility of rolling over here until we get back above the 9 and the 20 on the daily. Going to the 4-hour, you can see that the intraday is down. We do have a downward slope and separation, but in the last 4 hours they've rallied it, and we're back above the 9 right now and trying to hold above it, but the trend itself is currently down on the 4-hour, but is being challenged. On the 1-hour, a little bit of a different story. We had this downward trend, and they took it back overnight, and now we're above the 9 and the 20, and we're starting to get slope and separation to the upside on the 1-hour. On the 30-minute, you can see same thing. We had a downward trend, they took it back, and they've held the 9 and the 20, and we're getting slope and separation to the upside, so the trend is up on the 30-minute. Same thing on the 15-minute, and on the 5-minute, we're getting a little bit of consolidation, but we're back above the 9 and the 20 right now. So coming into the marketplace, most of the time frames that we're looking at is to the upside, but we do have some challenge to the trend. I'm expecting a choppy day. It's the beginning of the month. I'm expecting a lot of different rotations on the open as we're getting positioning for the beginning of the month. You can take a look at the bigger picture. We're still inside the prior value area that we were holding going into the end of the year from October through to December. The microcomposite VPOC in the upper Gaussian is up here at 63.50. We're currently just above that. We did fall out of the balance that we were in up here and come down and found buyers again back down at the last price that we accepted before the breakout. We're currently just above the microcomposite VPOC from that last quarter. We're just above the composite VPOC. Somebody was actually thinking I had an 8-ball because I said we're probably going to close the month right at the composite VPOC, and we closed at 2061 and a quarter. At the time we were down trading in the 56, 57 area. When I called that one, but it was just normal. I mean, if people are closing out the month and they're trying to close positions, where are they going to find sellers or buyers? Well, at the most accepted price that goes all the way back to 2013. So we're currently just above. There's a little bit of a CLVN here at 63.50. Above that, you want to be thinking a move back up into the 69.75, but below that, I think we come down to the gap, come down to the magnet at 61.50. Key line in the sand today is going to be down here at 57. You could use 55.50 if you want. That's the safer one. Basically, we still have a naked close down here at 56, but I'm going to use 57 because below 57 I can look for a move down into that 56 close to get myself funded, and a test of this 54 and a quarter value area high from the last little balance area, and possibly a move back down. My main hypothesis today is twofold. Above 63, I think we get stuck in these wicks right here, and we have an inside choppy day. Below 63, I think we come back down here and we chop inside of this wick. So my main hypothesis today is stuck in the wicks, either above 63 or above 61 to the 73 area and just chop around in this area, or to come down and chop in this area. But I think either way, we're going to get stuck in the wicks today, either in the bottom of this wick, in the top of this wick, or in this wick, the buying tail that we had on Friday. Key levels to pay attention to, obviously, are 57, targeting 55.50, the 51, the 47.75, and the 45.75, and then the big one below, if we do get some downward momentum, is coming back to test this 40.50 area, the microcomposite VPOC from this balance area. Above 69.75, the naked close at 73 and a quarter, and a move up into the 77. And if we do get a rally, possibly a rally up into the 85, 86 area, and that's the microcomposite VPOC for this balance area that we are trading in up until Friday. All right, take a look at the overnight. Overnight, we're trading near the highs. Our overnight low is down at 55.50. Our overnight high is currently 66, but it looks like we're going to put in a new high. They created in this last hour, they've created a double distribution, and that double distribution, look where the V pocket or the LVN is. It's 63 and a quarter. That 63.50 CLVN. That's going to be a trade zone for me. You know, we do have the top of the gap zone, but I'm taking the gap off just simply because of the fact that we traded through it and came back. So we've tested it from both sides. I tried to ask Murad whether or not he's leaving the gap on. I can see if he's taken it off the flex level. He hasn't. Oh, he just took it off. That was quick. That was interesting. So the gap is gone there. Above the 63.50. You've got the 67 range high, and then the big target, the main target above, is going to be the naked VPOC at 70 and a quarter, and our naked close is sitting behind here. The naked close is sitting behind this target. That's going to remain as a target, and again, I think that if we can stay above that 63.50, then we're going to chop around in this area. Our daily ATR, 20-day ATR, is running at 21.79. So off of the low overnight of 20.55.50, 21.79, our daily ATR upside target is, that's wrong, is 2077 and a quarter. Off of the overnight high, our daily downside target is down here at 54. So, both hypotheses of the getting stuck in the wicks follow suit there. Our overnight VPOC is not likely to change, but it could shift to 64.50. We'll have to watch for that coming into the last 30 minutes, but currently right now it's at 20.58.75. And that's just below our naked VPOC from Friday. And that's about all the information that I need off of there, so I can take this down here. I'd be targeting just in front of this 70 and a quarter. I'd be targeting the 69.75. That's that microcomposite VPOC. And then our numbers to the upside, 73 and a quarter, 77 and a quarter. There's a little bit of a LVN here at 80.75. Scene of the crime for the Fed is 81.50, and then above you've got that 85.75, the microcomposite VPOC. And then above there you've got, it gets a little thin up here, so the target is still going to be that 93, which is basically the HVN. We had a triple distribution on the microcomposite. They filled this area in pretty well, though, on Thursday and Wednesday and Tuesday of last week. So there's no real microcomposite LVN to lean against. So if we get up into this area and we accept 86.75, 85.75, I would be not looking short. I'd be looking to stay long up in that area. I'm going to shift this from 85.75 to 86.75. Okay, so with me, I mean, it doesn't change much from last night, but my thought is above 63.50. I said last night 60.75. 60.75 is our month open or our week open, but I'm going to be shifting that line in the sand, the over-under, to 63.50. So above 63.50, I want to stay long into that 70, 73, and those upward targets. I'm really not a shorter. Above 63.50, below 63.50, it's all about the short into the magnet at 61.50, the naked close at 61 and a quarter, and a push down to test this this 60.50 level, which will be another trade area for me 60.50, 60.75. You can use either. Below that, move down to take out the naked VPOC at 59 and the overnight VPOC, and a push down into these targets below. The midpoint will be a trade level for me at 56.25 to come down and to take out the overnight low and test our daily downside ATR target. Below that, I've got a target of 51.25, and then our value area low at 49.75, and below that test of the range low. And then our big target below doesn't change. It's still going to be the microcomposite VPOC down at the 20, 40, 50, and the year open at 37.75. Don't need critical mass. And all our targets to the downside all remain the same. And our weekly, last week we had a range of 48.50. Our weekly 20-period ATR is now running at 65.88. And so based on the action so far this week, our weekly downside target takes us all the way down to 2,000. Our weekly upside target takes us all the way up to 21.25. Personally, I wouldn't have any problem with coming down and testing the 2,000 level again. Although we do get below that 2016 in a area, that microcomposite LVN, I would definitely be majorly short into the 06.75 and the 2,000 weekly downside target. I'm questioning whether or not we're going to see that happen. I still think we've got some repair work to do and push into the 2100s. If they were really going to make a big move this week, I think we would have been opening up down inside the 40s today. They did a good job of holding the market up overnight. So hypo number one is a large opening range, possibly coming down and testing the 59, 58 level, finding responsive buyers there, then coming up and getting stuck and whipping back and forth in the 70s with possible upside of 77.25. So open auction in range or an open test drive, come down, find responsive buyers, and then work our way up and chop around in the 70s. That's hypo one. Hypo two is we try to break out of the prior day range, get up into the 69, 70, maybe even 73, then find responsive sellers, and then fall back down and come down in towards this 59, possibly 54, and get stuck in this wick, in the lower wick. That's hypo two. Hypo three is we get responsive sellers, fail to break out of the prior day range, come down here, chop around in the 59 area, and then fail, take out the overnight low, and come all the way down into the 45 to 40, 50 range and back inside of that balance. That's hypo three. And the last hypo, which is less likely, is we break out of range, come up into the 70, chop around here, and then get continuation and trade all the way up into that 86.75 level and get a continuation day. So those are my three main hypotheses, or four, but I put more weight on 1, 2. And then taking a look at the Keltner, we've got the middle Keltner line sitting at the 62.50 right now. A move to the upper Keltner takes us up to test the range high and into that 70, 69.75, 70 level. A move below the Keltner takes us down into the 56 and that overnight low down at 55.25. Gold has broken out again. So we're coming up here. I'm going to build a new little microcomposite up here so we can see where the value is. Value right now is at 1280. We poked into the 1300s overnight. If we get back into the 1300s, I'm looking for a rule of 10 today on gold and a push up to test the 970 area and complete the rule of 10 with the break into 1300. If we fail to get into the 1300s, they got to come down to find buyers. First spot is 94, but I'd be looking for them to come back down to this 1280.60 to find buyers, because that's where they accepted value on the breakout. So look for them to come down, find responsive buyers, and then rotate up. We are not done with the 1300s with gold. We got the breakout away from the composite. Remember that 1235.30 shifted from 1204 up, and we accepted that value, and now we're breaking out. So they should see continuation and a push into the 1300s with the main target above right now up here in the 1324.25 area. So that's what I'm looking at. That's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.